We had some very good trades lately. The price action was very clean. We had very nice accumulation there on the lower section, which was a loss before taking a win. There we had an accumulation as well, which was a model 2 with the target of the range high. Right now we are distributing and we are on a confirmed distribution towards a range low. On BTC it doesn't look that nice because you have an accumulation there, accumulation there. The return to zone can be better, to be honest, because you have those two accumulations. It's not a higher low, you know, very good return to zone, leaving liquidity. But when you look at USDT dominance, it looks a bit better. So you have your USDT dominance chart right there, which didn't hit your demand POI yet. So you are not in the demand POI, in the higher time frame demand POI, which is the best POI to bounce from and to go higher. So yes, you're accumulating here. And yes, confirmations are met, but it doesn't mean your POI is hit. You're front running it right now, which can happen, which is why the confirmations are met to go higher. But if this fails, I will still look for a good bottom in the demand POI to take USDT higher. So if that happens, I will short on BTC when we got confirmations after that demand mitigation on USDT. So that will mean a short on BTC, because on BTC on a higher time frame we have supply here on BTC, and you didn't hit the refined zones like this and like this. You only hit the higher time frame supply zone. So what is your demand on USDT? This is your supply on BTC. So that's equal. And you did hit it on BTC. You didn't hit the demand on USDT. Back to rotation towards that range low. If that doesn't happen, in case we go higher, I already explained this. We deviated and I want sort of model to take it lower as well, because we have massive weekly liquidity, weekly fair value gap right there, and a end of the liquidity there, and I will look heavy for shorts when we are there. So right now let's go to XPL, because in XPL we have exhaustion. So we have a lot of exhaustion, wicking there, wicking there, wicking there, wicking there. These are all wicks, which means exhaustion. We are leaving liquidity behind on the below us. So this is all liquidity. Those low, 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 low. This is all liquidity. That's why I'm looking for shorts to take out that liquidity. We had a distribution schematic right there with the target being the range low, but you didn't hit the range low yet, which means the technical target is not hit, which means you can still watch for distribution. So I will watch to take out that liquidity point and go lower. If we take out the liquidity point, have a good aggressive breakout structure, I will be shorting XPL. If we deviate the tab 2, the current tab 2, and get an aggressive breakout structure, I will short XPL as well. So that is XPL. Let's look at our silver short. Didn't even share this on my Twitter yet, but we are obviously short on Twitter. On silver. Supply got hit. We had a move up right now, which is totally fine, which I already explained in yesterday's video. And we are deviating that high right now. And we can potentially have a local schematic in here, as I explained yesterday. That's why I have my stop above that high. If we take out that high, I will watch for re-entry and take it lower again, which is very nice as well. Like, confirmations are met. You cannot do anything about this trade anymore unless you make a Wyckoff schematic. You throw your stop from there to there. That's the only way you can manage it. Like, if we go higher, you will look for re-entries and take it lower again, because this is the most textbook setup I've seen in a while. On a higher time frame again, okay, if price indeed goes lower, I will watch for entries at that extreme demand to take it higher again, When price comes into extreme demand, breaks structure aggressively back to bullish, I will long silver. If we deviate the low, okay, deviate the low and break structure aggressively, I will long silver. So that's silver. My voice still hurts a lot, guys. So I'm a bit less energetic, maybe. But gold confirmations were not met, so you're not short. I cannot make it more clear than that. If price indeed grabs that point, I will not short it because I'm already short on silver and I don't want double exposure. It's super simple. If we have a local schematic, that changes things. If we have a local schematic here, I will short gold and I will have double exposure. If we deviate the high, I will redraw my range from here till here. This low is not a good low at all. Do you see the liquidity? Highs, I mean, higher low, higher low, higher low. I will redraw my range and short it. That is gold. Ethereum has made a good low on a daily. So Ethereum has made a pretty strong low here, which are 1, 2, 3, which can have followed through all the way towards the range high, which you can create a distribution model after. That will mean redrawing your range on Bitcoin and USDT as well. So that is ETH for the higher time frame. We are now in this range from high to low with some supply above you, with some refined supply there, and a lot of liquidity below you. Like this is all liquidity. Why is this liquidity low, higher low, higher low, higher low? So that's ETH. Nothing more here. You can watch a local schematic here with price breaking through the range high from a schematic going lower. That's what you can watch. But right now, you're already creating a pretty good high. You can watch for accumulations after. Like, if it goes lower right now, you take out the range low first. Leave the range high clean, you can watch for accumulations. So that's ETH. Pretty clear. Then the last thing, the last thing on crypto I will discuss is Doge. I'm not short at Doge, but this is looking very nice. We did grab the liquidity point. As I talked about yesterday, I'm not shorting. Why? Because you almost made equal highs there. Why would you short equal highs? That's stupid. Don't. Okay. So you didn't make a good low here. What's the daily saying? I'm not short here. I'm not short. What will make me go short is an extreme supply mitigation or extreme liquidity. But I don't see extreme supply. So the only possible way I will short this is deviating the high again. Is deviating a high again like this and go lower. What you have at that moment is a 1, is a 2, is a 3, aggressive breaker structure, and I am short. I will probably short it even 2%. Higher risk. Look at that liquidity. USDCHF. This pair is building up an absolutely magnificent Wyckoff schematic. Let's look at the volume profile. I already posted it on my Twitter and in the compound. If you're not already in the compound, by the way, Link is in the bio. And do I even have to explain this? Like structured demand, less structured demand. You have liquidity building up on the upper section. You have a deviation of the range low. So what you can expect is a mitigation of that demand zone, aggressive break structure, and I'm long, or a deviation of that tap 2 and an aggressive break structure, and I'm long as well. Best volume profile. Volume profile is now in the upper section, a lot of volume right there. Want a volume profile to look like this, you know. You don't need it to look like that. It's always the best to look like that in the lower section of the range. So you need the volume profile to move down in the range. That's why you need time displacement to move it down. Okay, time displacement to move it down in a range, to have a good looking range and not an inefficient range with all the volume right there. So that's what I'm looking for on USCHF. Got my alerts ready, and I will take along if we get the confirmations. Guys, if you have questions about this, ask your questions in the questions channel in the compound. Links in the bio. See you on the next one. Ciao, ciao.